The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 176, Nasdaq up 53, S&P's up 21, gold up $5.10, trading $19.52 an ounce. We got silver up 14 cents, $26.87 an ounce. Light sweet crude flat, $42.38 a barrel. Notes and bonds. You got the 10-year up by 4 ticks right now, 139.22. For the 30-year up 14 ticks at 180.01. And King Dollar. King Dollar's down 192 ticks, trading 93.054. The euro, the yen is at 105.76. The euro is at 118. The British pound's at 130 to 1 U.S. dollar. Tom O'Brien, welcome back.
Good morning. It's good to be back, man. Feeling good. Market's feeling good as well, so it's good to be back, man. Feeling good for sure.
I'm telling you, man. You know this market's something else. And if you take a look at this, the Tesla move so far is pretty amazing. Now, Tesla, folks, okay, the day of record on Tesla was last Friday, so this is going to get really interesting. Okay, you had to own Tesla last Friday in order to basically get the split. This thing, you're showing 29. What the high? 29.29. And then, you know, just ripped right off that high, man. We go over to Apple, and I was listening to you in the program. So today's the last day in Apple, right? Today's the. It is. Today's the.
It is. I think Tesla's is a week from today, maybe. That's why it's still trading at 2. Yeah, it's still trading at 2,000.
Okay.
I mean, if it had an effect, it would be split, right? So I think it's it's a week from.
It's not. It's the. I believe it's the last day you have to own it. They don't split it right away. You have to last day you have to own it, day of record, and then they split it.
Okay, the split goes into effect on Tesla a week from today.
Right, but he had to own it on Friday.
So you can still trade it though at $2,000. What happens if you trade it today at $2,000 then and you own it? Do you see what I'm saying? It's going to have to. Okay.
I'm not sure. Yeah, I guess when I pulled it up, it said that the last day of record was Friday. But anyway. It's gonna. We'll find out at the break because it makes a difference, folks. Okay, you know.
But Apple, you are right. From what I had read, today's the last day. You want to get ahead of the split for Apple, and it looks like the market charged higher in the open, but gave back $15-16 just like that, man. I mean, we're up 1%, but we're up $5, and we're up almost $20 on Apple.
Yeah, and if we go inside the NDX, we take a look at the NDX. The leader out here is Fox this morning. That's up 2.3%. Expedia is up 2.5%. Align Technology is up 2.2%. Taken away from it, you have DocuSign down 3.2%. You get Tesla down. That's so unusual. Down 2.7%. You get Zoom down 2.3%. You get Moderna off 2.3%. Bottom line is that
you know what, real quick, just to throw. I was just going to add the Tesla deal, right? So I saw kind of the stocks pulling back in terms of Apple pulled back a little bit, right? You saw the markets pulling back. And I said to myself as I typed in Tesla, I said, oh, man, I wonder what happened. Because Tesla's like, it's everything that happens, Tesla's like it happens 5 times to it, you know? And as in, it's just so crazy on the way up that when I saw the tech stocks pulling back, I said, oh, in my head, I go, I bet Tesla's pulled back too. And already it's down 3.2%. So it's kind of like it just moves even faster than all the tech stocks, and they move faster than everything else, man.
Right. And now I'm gonna show you here, right, folks? So you get the chart up, okay? But watch this. Someone dumped a lot of shares. I'm gonna put up. This is sweet because it's early in the morning that we can see this pretty clearly.
Okay.
So this is going to be with the largest impact. Okay. No, we can't. I'm not doing the opening because that doesn't matter. That's an acceleration. Well, I guess. Okay. Well, actually, at $2,000, I can see that there's a lot of them really. Well, 7,100 at 7 minutes at 10. 5,000, so that's not as big as I maybe thought, but times 2,000, that's some big numbers, no doubt about it.
Definitely.
Yeah.
Hey, how about I heard a statistic over the weekend just in terms of the broad spectrum of the market right now, how focused it is on these tech stocks. 1 out of 5 S&P companies, so you're talking about 100 companies are 50% off their highs in February, man.
I just heard that on the phone, when I was listening to you on the elevator on the way up. That is a number, man. And 50% off. 50.
Yeah.
50.
Yeah.
Yeah.
And I'm guessing there are a lot of smaller companies, right? Like would expect. Maybe the investors are worried. They're not quite going to survive in the same way. They're not quite as beneficial. You know, they aren't benefiting as much. But man, you got 500 S&P companies that are 50% of their market cap, just where they were 6 months ago. Meanwhile, you have Apple up 76% from the market low in March. Just staggering stuff.
They certainly are. I mean, it's a monster. Let's go to Jose. Jose, what's going on, brother?
Top of the morning, fellas. Hey, explain to me, where is the SEC investigation where 5 stocks can get a president reelected? Would someone dig up Arthur Levitt, please?
Well, you know, we talk a lot about, you know, the weighting structures that are inside here. And they're very large right now, but even at most times they are large. That's the other side of this too. Do you know what I'm saying? That this is not exponential this time. I mean, but it happens, man. It happens. That's the bottom line.
Come on. 5 stocks on the NDX 100 make up 50%. The other 95 are underwater and doing horribly, make up the other 50%.
Well, you know what the good news is? The good news is that's what TFNN's all about. You're educated, you know it, we know it. Then the matter is, okay, what do we do about it, right?
Yeah, well, there you go. What do we do about it? We get the Darth Vaders of Wall Street, Goldman Sachs and Morgan Stanley, and we pick it in front of their New York offices.
Hey, listen, did you listen to Larry's program? Did you listen to Bill Meridian before us?
No.
This is, remember, all these programs are archived, right? This was an outstanding program. Bill Meridian laid out, you know, he does cycle research. It was a great program, man. I'd encourage everyone to listen to it. I mean, he just lays this out. You know, we all use different tools. He's a great, the presentation was unbelievable, man. But he has there's a lot in there that all of us can use, you know, so.
Yeah. Is this Larry Pesavento you're speaking of?
Larry had the guy named Bill Meridian on. I believe he has him on once a month. But the whole show, Bill was doing a presentation that was very impressive, you know. And you'll enjoy it, Jose. You'll enjoy it.
Yeah, I'm going to check in on when it happens. Hey, listen, Tom, let's look at Apple's last 4 stock splits. It's the same pattern. It's the same pattern that we're doing in 1999 right here. This is all mimicking 1999, where you're doing an Eiffel Tower up and it's going to be ugly on the way down. Every time Apple splits, it runs again for a few days, a week or so, and then it caves in. Is that what's in the cards here?
There's nothing, you know, there's nothing stopping it. Let's put it that way. Do you know what I mean? Apple, you know, when we had one of the Tigers called last week, and, you know, Apple is an ABC up to 543. Now, it doesn't have to hit 543. It hit 515. We'll see whether it can get 543, man.
They got the 5G phone
Good deal.
coming out, too, so be careful, because that 5G phone, I'm waiting to buy a 5G Apple phone, man. I think a lot of people are. I think
I wouldn't be shot
to see that.
I mean, don't shot Apple. They have too much cash, man. Cooking, brother.
Thanks, Jose.
Stay right there. Tom and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's up 229. You get the Nasdaq of 90. S&Ps are up by 27. Let's go inside the Dow and see what's putting some juice inside that baby. Oh, yeah. Okay, so you got Apple. Apple's number one.
Right.
Apple's putting 53 positive points. Boeing 49. Caterpillar 16. Disney 16. Goldman 12. Taken away from it, hardly anyone. United Health 17. Johnson & Johnson 10. And Walmart 8. Small numbers, man.
Yeah, pretty broad increase in that Dow across the board there, man.
Yeah, there's no doubt. You know, what was the, I got to find this article. There it is. This is pretty intense, folks, okay? So listen to this. I mean, this shows how much money is out there in the market in general and how fast these funds can raise money, even when they decide that they're going to default on just thousands of loans. So look at this story, man. I sent you this earlier, Tommy, right?
Yeah.
And what it is, folks, is this. So picture you got some of the biggest property funds out there. They are not basically paying on the loans that they already have. These are all commercial loans, okay? So some of the largest real estate investors are walking away from debt on bad property deals, even as they raise billions for new opportunities born out of the pandemic. You get Brookfield, Starwood, Blackstone. Now, what happens, folks, is that they're in the commercial mortgage-backed security market, okay? What happens there, and this is the reason that they're in it, is that these are non-recourse loans, okay? So basically, institutions are stuck with them, public is stuck with them. Not the public, but the public will be stuck with some of these inside the ETF structure. So what they do is they just give the keys back, and that's it. Okay, because what ends up happening, if the fund doesn't make money, these funds are probably down 40, 50% right now, 30%, whatever it is. They're big numbers because commercial, real estate is really in tough shape. But it just blows my mind, actually, that
Go ahead.
No, go ahead. Yeah.
I was just going to say they're basically willing to say, you know what, that collateral that we put up for those loans, we don't want that collateral anymore.
Right.
So you just take the collateral and you write off our loan. Now normally, you're putting up a down payment, just like anybody is. You're putting up some skin in the game with some collateral.
Right.
Well, the value of those equities has plummeted.
Right.
And so even with having to lose your prior equity in there, it's more beneficial to say, hey, we're just going to cut our losses. We're going to allow the banks to repossess the collateral because we don't even want them anymore, and we're going to move on to more beneficial areas of their business.
Because even if they, and this is where the kicker comes in, see, even if they kept it open, they got to get back to the high watermark. They got to get back to even before they make a dime. So,
which they know that is a far cry from where, you know, when you're talking about hotels, commercial,
seriously, man,
office space. You know, it's they're so far underwater. It's what many people did in the housing crisis. You know, they said, you know, my house is worth 30% less than what I owe on it. Why am I going to be just paying that down? I'll you know, write that off, declare bankruptcy if I have to, because it's an obscene number when you look at it.
So the key is going to be, folks, okay, when is it going to be the time to invest back in hotels? That's what it really comes down to. Do you know what I mean? It's like, okay.
Oh, listen, my friends and I were having an in-depth discussion this weekend over airlines and Buffett, you know, in terms of, banks and airlines, but banks tying into airlines and how he you know, sold out of a lot of airlines kind of near the lows. But it's a similar scenario, man. I mean, some of these airlines, right, they're far off the lows. But I was looking at them. I mean, they are trading basically. Now, wow, check that out. I didn't even look at them this morning. Americans up like 7% with the market. But when you look at this, the market bottomed out on March 23rd, okay? And you have the airlines trading at prices of March 24th. Right. Meanwhile, you have the NASDAQ up 76% from that price. You have the S&P up 55% from that price. So, yeah, they might come back in the future, but are you willing to hold on for 2 years, 3 years, maybe until normal life might resume? I mean, it could be 6 months to a year, too. But there's opportunity cost to all that going on, too, right? So keeping that capital tied up in a losing position, there's a lot to say about the benefits of not doing that.
And when on top of that, you're still making also... Let's see. Yeah, it'll be a political decision, because what will end up happening is that if the airlines don't get any more money, folks, okay, some of these are going to go out of business. So you're also making a decision that there's going to be another stimulus bill to keep them in business. You know, because
I mean, you already saw. I think it was American or United cutting travel to 15 cities in the U.S. Probably more of the less traveled cities, right?
And our airlines are international airlines. The big airlines, folks, are all big international airlines. Well, guess what? Internationally, you know, you're talking about if you had 5 flights before, you might have 1. You know, so it's a very big number. And then it's contingent on the aspect of, you know, the bottom line, can you get in the country? You know, and, you know, Indonesia just closed the country until at least the end of 2020.
I saw that. Yeah.
And that's going to hurt them. I mean, that's, you know, Bali is, I think it's 27 billion Bali alone takes in on tourism, folks, okay?
I bet.
And, you know, they just said, listen, we got to shut it down because, you know, the infection rate is bigger than that they want it to be, you know. So.
Yeah, and how do you it's really tough to do it, man. I mean, some of the countries in Europe that really got things under control, I think Spain is spiking again. So you have these ebbs and flows, and if you're a top travel destination of the world, it's only a matter of time, man, that you know, if coronavirus isn't under control, that you're bringing people in from all over the world, that you get your own acceleration there.
Yeah,
so.
Totally. Let's go take a look at the dollar. So good old King dollar. You know, last week, folks, it got back in. Well, first off, it busted its lows, jumped right back inside the range again. And bottom line, you're down 165, but it almost looks like it's already rejected 92.840. You're at 93.087, so it looks like these swing areas are in play here. You know, the swing area we're talking about is August 3rd as well as August 12th. And the number there is 93,991. And if we go over to the gold contract, we're going to see gold was traded as 1970, so it was up $23 this morning. Now you only got it up $3. Let's see what we got here.
Hey, how about we had movie theaters opening this weekend again?
Oh, really?
With AMC, yeah, they opened 100 theaters. I saw some friends on social media talking about that they were in some theater, and then you had Russell Crowe's movie Unhinged, I think. It took in about $4 million, which is not bad considering what you're pushing out in terms of the availability, but AMC still kind of slightly negative. No real pop on that. The indoor deal, is very tough. Florida, the curve going way down in Florida for sure. But we're still dealing with 3,000 cases a day, a positive rate of 5 to 7%, far above what you'd want it to be at to not have community spread going on. I went out to dinner last night. I was outside. It's nice being outside. The indoor deal, and you got a lot of indoor dining going on. But indoor movies, it's a tough deal right now.
Well, one of my cousin's folks, okay, they dropped a car off, Tommy, and they're going to University of Tampa. So I met them there. It was a move-in on Saturday. And they're only moving in 1,000 kids at a time. I have no idea how the spreads are not going to be dramatic. And normally it's 4,000.
I was going to say only 1,000 kids at a time.
Well,
this
you know
deal,
what's cool?
schools.
All the streets, everyone had masks on, the campus. But it was like, I was looking at so many people, I'm saying, oh my God.
College kids, man.
Stay
they
right
hang
there,
out
come right back.
Yeah.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow up 250. You get the Nasdaq up 74. S&Ps are up 27. Let's go take a look at one of these equities. I think. Let's see. BLKB. Is that BlackRock? I'm not sure. Oh, Blackbard. Okay, so let's see what. Okay, this is a software-related company. The low's 38. The high's 95. And The Tiger's looking for an ABC up and where the sell would be. Okay, interesting here. Let's see. So let's put this on a weekly. You know, once you broke out over this 66, there's not much action here, man. I mean, the volume died in the vine. So this is kind of dangerous, actually. 60, 63.99, 65. And I don't think it's actually an ABC up. Let me show you why. I think this did a 0.618 retracement. Close that one. On that last, if you do a 0.618 retracement, folks, okay, it negates an ABC up. I gotta open this up more. Okay, so bear with me 1 second here, folks. Do this on a weekly. Now I gotta open this up so I can see it more. There we go. Now let's see what happens. So if I go from there to there, oh, it's still, yeah, that did more than a 0.618 retracement. So I'd be careful with this. I'd put a stop on it, right, like pretty close, because you get 4 weeks in a row that you're going sideways and you get a big contraction of volume out here, man. And of course, we get a market that's phenomenal.
Yeah.
Let's go to Warren in Boston. Warren, what's going on?
How you doing, Tom?
Doing great, man. Yourself?
No, not too bad, not too bad. It's hopefully fall's on the way up here.
Why, has it been hot?
Oh, it's been brutal.
Really? Interesting.
It's been like Florida.
Yeah, well, you know, listen,
Yeah.
I tell people, you know, I've been out of Boston now 22 years, man, and even when we were in Boston, we always had a house down the Cape. You'd have to get out of there in the summer, man. What people don't realize, Boston's, man, the heat comes in and it doesn't leave for like 6 weeks, right? You know?
Yeah, that's the way it's been.
Yeah.
You know, many, many days in the mid-90s, so.
Yeah, and that's cement. And, of course, up there, you know, even we had window air conditioners. We didn't have central air, man, like down here. Do you know what I mean? So it's like, okay, people come visit you from Florida and they look at you like, what are you, out of your mind, man?
Yeah. Well, now you go by houses that have window air conditioners and they got, you know, 3 or 4 of them in the window. And all I can think of is, you know, that's a lot of work every spring and fall.
Oh, yeah. Oh,
taking
yeah.
them in and out. Yeah.
You go hide in your room, man. I remember it well.
Yeah. Yeah. I have a fundamental question about Apple.
Yeah.
I was thinking about, you know, trying to buy some shares before they did the split.
Okay.
And one of the things I like to do is go look at the book value.
Yeah.
And I went in there and I found out the listed book value was about $17 a share. So I checked it different places and actually went in and started doing some calculations, and it's correct. Now, I know a good price for a stock is like, you know, 2 times the book value, but this is so out of whack with what the price is. The price-to-book ratio is humongous. So,
yeah, but there's something wrong with that calculation because just the amount of cash, they generate free cash flow of $60 billion a year. So yeah. I could find this, but it would take me just too long right on my screen.
They are at a PE of like 38, 39, which is a little staggering. But the other side of this, you know, I was listening to a lot of commentary over the weekend, Warren, is that you got rates at 0.6%, man. You know, when you start talking about companies that are super reliable, that aren't going anywhere, right? Apple's going to be around in 10 years, 20 years, probably 30 years. There's a lot to be said about an environment where you can't get any money in a bond market, and there's the impetus to start trying to put, you know, some of the money that you might to some of these super reliable companies. They're just going to churn out profits, churn out dividends on a regular basis. So that's just part of what's going on to keep in mind.
You know what? It might be too, Warren. This is interesting, man. I mean, that number might be exactly what the number is. But that would also mean, okay, so book value, they might have not. Okay, so picture this. In the real estate market, the reason there's so much money in real estate is that, let's say you buy a building for $1 million, right? And, you know, what has happened since 2010, you've been able to take accelerated appreciation, okay? So you buy a building for $1 million, right? Right now, 2020, on the books, that building would only be worth $500,000, when in fact the building is probably worth $3 million.
Yep.
In Apple's case, maybe the way this works is that their book value. So book value, I believe, has to do with, it's a hard, it's the board. It's something like this. It's not how much money you make. It's like how much money have they actually put in, to something. So
yeah, it's really how much your assets are worth minus your liabilities.
Right.
So they have to list all their liabilities.
But
so
I wonder what do they? I wonder what they list for their brand, number one, because people get, companies get in trouble when they put their brand way too high. Maybe they have their brand way too low.
Yeah.
But the other side too is that companies with big book values usually are huge industrial, right? You got a lot of machines, you got a lot of inventory, you got a lot of equipment. That's not as much Apple when you talk about technology, future growth. Other companies producing their phones, right? I mean, they don't have warehouses with the equipment that they're producing it. So things really shift when you talk about a book value of you get the cloud infrastructure. They're going to have computers for that, which count. But man, I don't think that puts an accurate value on the amount of cloud revenue they probably get from a mainframe.
Yeah, I guess my knee-jerk reaction is when I look at that, it says, okay, if they get really some competition someplace, somebody that's really significant competition, that price can really tumble an awful lot to get down to what the book value.
And you're right.
So.
Just as I look at the PE, because the PE is all predicated on future growth. If you're and think about the earnings that PE is priced on, right? Mammoth numbers, and they're saying 38 times mammoth numbers we're pricing it. So there's a lot of greatness in the future priced into that Apple stock for sure. Yeah, for sure. But the other side of that, like I just mentioned before, is that I'm an Apple fan. I got an iPhone. And I'm sitting here waiting for that 5G phone because I'm going to be buying one, man. I've been waiting for it. That's, there was no reason for me to upgrade before it. So there's going to be a cycle that's probably priced in. And the recurring revenue they're adding, the cloud revenue they're adding, all that, loading the boat up at $500 on Apple, maybe not the best idea, but.
And what has happened in the past? See that 38 PE? That Apple was riding for few years at 14 to 15 because it was always like, wow, it's really funny. Apple doesn't have a monster PE for the type of acceleration it was doing.
They kind of shifted a little bit, and they weren't future, not the PE like Amazon.
Well,
Stay cool, brother.
I thought I'd throw it out there.
We appreciate it, man.
Thanks, Warren.
All right, take care. Bye now.
Take care, man.
Stay right there, folks. Tommy and I come right back. Dow's up 285, Nasdaq's up 61, S&P's up 28. We'll come right back.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 287, Nasdaq's up 59, S&Ps are up 27. We might get a sacrilege happening out here a little while, folks. You get the NDX only up 46 points, man.
What's happening?
I don't know, but there you go. Hold it. Let me pull this up for a second. Hey, let me pull this over here for 1 second, because it looks to me. Come on, where is it?
Apple's giving it almost all back, man. They're at 501. They had a 515 print on the open, and they're up about 0.7% right now, up $3.60 after being up $18.
And this is where that weighting structure is awesome on the way up and just terrible on the way back. Yeah, so we're very close to testing out not the lows of last night, but the lows of this morning. Since the broad indices opened, meaning at 9:30. So we're at 11,610 and 11,591 is the number. And it looks like it's going after it, man. Interesting. Listen, folks, as you come over to our website at TFNN, you talk about an event. We got an event coming up. Our man, Mr. Larry Pesavento, this Wednesday, he's going to be doing a live trading event, live trading period, teaching you what patents he's looking at, how he gets in markets, how he gets out of markets, 9 o'clock in the morning to 2 in the afternoon. And the whole workshop, folks, is only $295, and that's including Larry's newsletter, which is a great newsletter. And the newsletter itself, Tom, was it $127, I think?
$97 a month.
$97
so
a month.
$100 right away, yeah.
Yeah, so you get that with it. Larry's going to be going through the advantages of using the ABC structure, the best time to trade, 3 patents that will help you identify shifts in supply and demand. Bottom line, folks, Larry's a pattern recognition expert, and what that specifically means, he uses Fibonacci sequences in order to basically, he's not setting up the patterns. The math sets up the patterns. What's cool about it, which I've always liked about it, is that you know what the number is before the setup is there, because you're basically dealing with geometry. But he makes it easy.
Yeah.
There's not, you don't have to get in a geometry class, okay?
He's got his Fibonacci numbers. He's got his levels of price and support. He's got his expansions and contractions. He's got his ABC numbers.
Right.
He's got his Gartleys, right? He's got everything on the charts, man. And so it's very simple. I follow Fibonacci 24/7. I went to his last trading event, which is crazy, man. It's probably 3 or 4 months ago already.
When I was interviewing him, it was in May.
Yeah,
I felt like it was like 5 weeks ago. It was in May, man.
It's mind-blowing, man. This whole coronavirus, it seems like it's, when something like this happens, right, it kind of blends together. And we're now pushing more than 5 months in
6
Florida.
6 months is going to be, you got it.
Yeah. So yeah, he'll be in there Wednesday, man. 5 hours, 9 o'clock, less than 48 hours from right now. When you sign up, you gain instant access to his newsletter. He just puts out a great weekly report on Sundays, along with videos, charts throughout the week. Current subscribers, a great deal, because you automatically get a month. Your next month is free of charge. So you gain that benefit as well, and that will be archived in there, and it should be a fun time, man. We got markets rocking and rolling. We get the Dow up a full %. We get the S&Ps up about 0.8%. Record territory in the Nasdaq, record territory in the S&Ps, and we still got a VIX at 22, and we the 10-year hanging at 0.63, 0.64%. Man, there's a lot of dynamics. Plus, we got a presidential election in 2 months.
Yeah.
Man.
November 3rd, I know.
Yeah, it's like 70 days, 68 days, 70 days. The RNC, their convention this week. Like I said on my show, man, it's going to get dicey. This is going to be a tough one in terms of an election. And I brought it up once before. Get ready for some volatility, because if you tie it back to 2016, man, the volatility that night on election night, I'm sure if anybody was paying attention, a lot of us were, the market crashed, right? The Dow went down, what was it, 1,000 points, 2,000 points? And that was when there was uncertainty. That's when the numbers started coming back, and everybody said, man, this is going to be really close. And we're really worried that it's going to be a contested election. And then the numbers kept coming in, and Trump was going to win by a landslide. And they said, okay, we love that. And the market went higher. Uncertainty is the last thing the market wants, and there is going to be a lot of uncertainty on election night. So strap in and get ready, man. And what a time for some live trading. Pick up those tools. Get ready for it.
Yeah, there's no doubt, man. It's
just
the reason I'm laughing, man, is that what we've had is that it doesn't seem to matter what is thrown at the market. It just keeps going higher. Listen, I'm a bear, but the reality is, it's one of these reality deals. You know what I mean?
I agree, but I am very hard pressed to imagine that it's going to be all roses in the week of the election, let alone election night. And it's only a matter of when that volatility starts to creep in, and kind of not if.
Yeah, for sure.
But it's we're right there. So when's it coming, man? Hey, we'll see.
Yeah, it's
stocks, man. Stocks. Which way do they go? They go up. That's what they say.
Yeah, that's what they're gonna have to teach in school, right?
Oh, man.
Until we get to TFNN and Tom and Tommy O'Brien, the Bull and Bear Hour, and it looks like the NQs are actually gonna basically have to go to confession, man, because they just must have.
Don't tell me.
They must have just.
Are we gonna
get
a red print? We're 10 points away, man. Watch out.
So let's just go see, because what this is going to be, folks, this is going to be the aspect that, just as Tom was saying, it's just that Apple went down a little.
Yeah, totally.
So let's see. So Tesla, right now, that's down 70, okay, and Apple is up $1. And we're down 20, we're down $17 off the high. And the kick is going to be here, if Apple can just go down even, let's see, $4.90. If Apple goes down $10 more, then watch out. Then it's going to be that's going to be the end of the world for Apple shareholders, because I don't think an Apple shareholder has lost money in this market.
Not since COVID, man. 212 Apple made it down to today, and it was trading at 513 pre-market. So it was $300 it was up. Now it's under 500 right now, but 212. Talk about an opportunity, man. And that stock, I mean, they were everywhere, of course, in the lows of March, but man, company like Apple, company like Amazon, company like Microsoft, obviously going nowhere, obviously going to be okay.
You know what I would love to hear, and we will in the future, how a professor can, first off, almost every investment book is saying, okay, that, you have your fundamentals, markets know what they're doing, and I want to hear is, how can a company that's already that large double in 3 months? Yeah.
That's one of the things, and man, there are almost endless variables in this equation right now. One of the things, though, is the note market, man. That's given you almost nothing to put your money into to bonds and notes.
It's got to go somewhere.
And so it's got to, exactly.
Yep. Dow up 275, Nasdaq up 31, S&P's up 24. We'll come right back, folks.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metal sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up at 233. Nasdaq is actually in the red, down 6. S&P's are up 17, up 17. It's interesting, Tom. This is the Monday after option expiration.
Yep.
And it's like, okay, man, they want to jam this thing lower so they can load up on calls to jam it higher coming the end of the week, man.
We got some earnings this week still, man. We got Best Buy tomorrow before the bell. We got Salesforce tomorrow after the bell. Intuit tomorrow after the bell, Dollar General on Thursday, Ulta Beauty on Thursday, along with others. So we're still going to get plenty of news, man. And then, of course, we're nearing the end of August, right? We're going to start getting the non-farm payrolls for that. So it's just going to be endless, man. And then the election, always. We're going to start getting debates on the election. It's just the headlines are everywhere, man.
No, there's no doubt about that, man. That is,
How about, can we jump to Lowe's, man? How about Lowe's with their numbers last week? talk about some of these, of course, housing stocks, but Lowe's just doesn't stop, man. Up another 1.7%. They were up 2% on Friday because they raised their dividend. They were up huge on their earnings last week, let alone they've now traded from 60 to 165, man. The trends of homes and sprucing up that home and the housing market in general, man, just crazy.
It's big. And, just coming across the tape a few minutes ago, folks, New York's in tough shape. That being said, though, guess what? If you have just a deck outside New York, okay, let me see what the number is quick. Oh, it's a monster number. So if you just have a small deck, and if you've seen the units in New York, they're small anyway. If you have a small deck on the outside, they're getting 5.4% more per square foot with one small deck for the whole place. For the whole place.
That's I mean, and that's quite a perk to have an outdoor deck in New York City. But I agree, man. That's
3 by 6.
Yeah, exactly right. I know. I hear you. Hey, New York City.
Stay right there, folks. We can think of swim coming up next. And I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Thanks, pal.
Thanks, man.
Go get him, folks.